Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. This is an extra broadcast here today because I've got so many members that would like me to do reviews on stocks. So I'm doing some extra broadcasts, extra work, working over the weekends, trying to catch up and bring you as many reviews as possible. So that's why we're live again this afternoon. I'm going to make another review for you, Applied Digital. So let's get set and let's get straight into it. Of course, you can enjoy it through the live broadcast or you can watch it as an edited processed video in a couple of hours from now. So let's go straight into it. Time for another stock review. This time we're talking about Applied Digital, formerly Applied Blockchain. It's had a recent rebranding, ticker symbol APLD. In this review, we are going to take a deep dive at the financials. We're going to look at the balance sheet, the profit and the loss, a solvency score, who's buying on the inside, sentiment around the stock, who's selling on the inside, a profitability and solvency score. A lot of detail here. We're going to look at the profit, the loss, how much debt they have. We're also going to take a look at the website. We're also going to look into some latest news and a full back test looking at the S&P 500. So a lot to go through right now. And again, just remind you that this company used to be Applied Blockchain. It's now Applied Digital. Okay, so this information is provided completely free of charge. No one pays me to make reviews like this. I'm not sponsored by the sources that I use. I use Alpha Spread. I will give you a link to that in a moment. I believe it's the most advanced algorithmic software because it's not biased, it's just numbers. And this is not like Mad Money or Jim Cramer where they have an opinion because they're paid to say an opinion or they're biased on it or whatever. I'm not trying to grow the biggest YouTube channel in the world. I'm trying to grow the best, most engaged, most honest channel in the world. And in fact, I'm not even in any stocks. I'm only in the S&P 500. I'm fully invested, but only in the S&P 500. So I can't be judged for being pumping, dumping, or spreading false information. All this information is facts using the most advanced software. And that is what I'm presenting to you right now. I will reply to all my members' comments in the comments below. So if you leave me a comment, I will answer all your questions. Do smash the like button if you like what you're seeing now. It helps grow the channel, but more importantly, it will suggest my content to you. If you don't like it, however, please click the down like and you won't see my content anymore. That's what it does. That's really, really important that if you don't like it, click the down like. And subscribe and ring the bell if you'd like to be notified about these breaking events and news throughout the day. Okay, what is Applied Digital? Let's start off nice and straightforward, and then we'll get into much more deep numbers as we go. Remember, this is now Applied Digital, was Applied Blockchain. Okay. So what is it? If we look at it, it's Applied Digital Corporation operates as a technology company which engages in the development and operation of data centers which provide computing power. The company was founded in May 2001. It's headquartered in Dallas, Texas, just down the road from me. Literally 5 minutes away. The listed name for APLD is Applied Digital Corporation. Okay, now Wesley Carl Cummins is the CEO. I'd like to invite Wesley to respond to my review if you'd like to. If you'd like to reach out to me, I'd love to interview you. I do have a Meet the CEO series. Perhaps you might like to do that. Employees, 121 employees, small company. As I say, Dallas, Texas, just down the road, 2001. Now, if you were buying this on margin, 60% maintenance requirement. So it's regarded as mid-risk with this brokerage. If you were buying it through them, they regard it as mid-risk. Low risk is 25%, 100 is the maximum. Okay, as you can see here, it's a market cap of 662. Now, remember, the market cap is just the value of the stock. Outstanding stock. It doesn't mean that's the value of the company, how much it's worth. It's just that's what people are prepared to pay for the stock today. That's not a basis of valuation. High today is 558, 52-week high 1162. Price to earnings ratio, as you can see, it's negative. The company's losing money at the moment. So it's negative $15.48. You're losing money. So the first thing we need to do is compare that to other companies in the similar sector. And in a minute, I will give you a link so you can go and compare to other companies in the same sector. But we're also going to look at the balance sheet and the debt position and see how that plays out. Dividend, no dividend, of course, here. It's purely a growth stock. Average volume, 4.5 million. Very low volume, and the average is today 692 is today. So it's way below average today. Very low volume stock, so you can get stuck in it. You might not be able to get out of it. It's not technically a penny stock at the moment. It's above $5. Anything below $5 is a penny stock. It's not, but it's very, very close. Okay, now Morningstar's given it a review. I don't use this at all. Very, very basic information. I would not use that as a guide to buy a stock, because Morningstar are employed. It's like JD Power tells you the best car to buy. You wouldn't go out and buy that because JD Power says they're a marketing company, and these are analysts that are paid to talk about the stock. Now, what's interesting is they consistently beat, apart from the last earnings, they consistently beat expectations, and Wall Street seemed to be typically about the same percentage wrong each time, apart from the most recent earnings. That's interesting. What is also interesting, apart from the last one, we have been moving in the right direction. So I'd like to know the news around this, and we can look at the news in a moment, why we missed here when we were expected to go up again and we went down. Anyway, who are we in bed with? Who else on this brokerage is also buying this stock? That way we can get an idea of how it trades. Soundhound AI, I don't know anything about that one. Riot Platform, I haven't looked into that one. SoFi, I do know quite a bit about. Actually, the CEO talks rubbish. He says things to pump his own stock. Has no reflection of what's going on in the actual markets. Ridiculous. So we are in bed with people that buy SoFi. If you buy SoFi, you're just gambling, as far as I'm concerned. Anyway, Marathon Digital, I don't know much about it. ChargePoint, I've done a review on it, but I don't remember what my view on that was when I last looked at it. And C3 AI, good digital. I've made money from this. AI stock, but again, it's overbought. Everyone gets a bit too excited when it comes to AI. They'll overbuy anything to do with AI. So it's going to be volatile. The company it keeps would say so. Anyway, there we go. There's our basic start. Let's now look at the company itself and learn more about them. So let's do that now. Here we go. This is the website, Applied Digital. Remember, it was Applied Blockchain. They changed the name. So let's zoom in and have a little look. So building next generation data centers, Applied Digital. Now, when I'm looking to invest, first of all, of course, I don't own the individual stocks to be, completely unbiased and transparent, so on and so forth. So I don't believe in owning the stocks. I only own the S&P. That way I can be truthful to what I'm saying here. Building next generation data centers. This is obviously in the world of Microsoft and stuff like that. And I own Microsoft and others great companies on the S&P 500, of course. But I'm looking for proprietary companies, unique companies. That doesn't mean to say that another company can't come along and do something that Microsoft is doing or whatever. But I prefer to choose a company that's unique and proprietary and is the only one doing what they're doing. So that's how I choose companies. Also on their balance sheets and their debt positions and so on. Good sound investing rather than get rich quick schemes. Anyway, Applied Digital designs, develops and operates next generation data centers across North America to provide digital infrastructure solutions to the rapidly growing high performance computing industry. Okay, what are we up to? What are they up to? That's a good question. What are you up to? Applied Digital is a US based operator of next generation digital infrastructure, providing solutions to the fields of high performance computing, HPC, and artificial intelligence, AI. APLD has two business segments: next generation data center and colocation services, and AI GPU cloud services under Psi Computing. All right, there's a bit about what the company is about. Mission statement, then we'll look at the news, then we'll go into the numbers. How well is it funded? So, mission statement. Applied Digital seeks to develop and operate ultra low cost digital infrastructure purposes built for high performance computing applications by bringing data centers directly to the point of power. This allows the company to build infrastructure that largely uses renewable energy and encourages the build out of more renewables by providing a higher return on investment for sustainable projects. I like all of that. I'm very much into that field, so that's good to hear. Okay, now let's look at the latest news from the company. This is just a couple of days ago. In fact, January the 16th. Let's read into this. A designer, builder, and operator of next-generation digital infrastructure designed for high-performance computing applications announced today it has signed a conditional agreement to provide data center capacity at its Ellendale, North Dakota campus, subject to finalization of definitive lease documents. The conditional agreement is for a total of 100 megawatts for a term of 10 years and is conditional on securing financing for the completion of construction. The company is in conversation with potential lenders to secure the project level financing needed. The total contract value, TCV, is approximately $2.2 billion over 10-year term. So we could be looking at raising money. We could be looking at the stock. In fact, we might be able to see that when we look at the chart in a moment. Has it recently dropped because of fears of dilution? We'll come on to that in a minute. How well is it funded? Does it have any cash? Does it have any debt? We'll look at that in a moment. Applied Digital designs, develops, and operates next-generation data centers across North America. We already know that. Forward-looking statements. This release contains forward-looking statements. That's just the verbiage. We know all of that. Okay, so they've gone through all that with us. We know exactly what they're planning on doing. All right, now let's just go into the numbers. First of all, just before we jump into the numbers, because that news has been out about a week, let's see if the price has dropped. It's actually gone up. People like it. So that would suggest, in my opinion, perhaps they are well funded, because normally if we're looking for financing, then it scares investors. Normally the stock would drop after something like that. In fact, it's gone up 10% over the last week. Over the last month, though, however, we're down 21%. So this news is about 15 days old. So around about here, there you go. There was the information being rumored, potentially dropped off, and now we're rising. So as I say, that makes sense. They're looking for funding. Down we go. People worry about dilution, and then it starts rising, which is what's happened now. Right. Let's go into the numbers of the company and have a little look. Okay, so there's the balance sheet. We'll go into it in a second. So we'll start off with the intrinsic value. The intrinsic value, a lot of people use this. I use the base case, but you have to dive more into it. Don't be lazy and just go, well, it seems valuable, it seems cheap, I'm going to buy it. That really doesn't give you enough information. You really have to be careful. Anyway, so APLD, intrinsic value. We've got the base case is 88% undervalued. Best case, we're not in a best case scenario right now. We've got macro conditions and all sorts of things, high interest rates, wars around the world. It's undervalued by 92%. Worst case scenario, 83%. So it sounds good, right? It sounds good. However, we have to be careful because there could be some warnings. Are there any warnings? Yes. Possible value trap detected. A value trap occurs when a stock appears inexpensive based on fundamental analysis, but fails to reach the intrinsic valuation over time. So often due to underlying issues not reflected in quantitative data. Scrutinize beyond numbers, assess long-term potential. Very, very important. So it looks cheap, and some people go, great, I'm going to buy it. It looks cheap. It isn't. Or it may not be cheap. We have to do more research, which is what this is all about. Okay, so let's do some more research. Smash the like button and consider subscribing to my channel if you like what I'm doing here. And remember, it's just numbers, facts. I'm not trying to pump anything at all. I'm just giving you the information. All right. Okay. Q2 earnings call. Our AI technology picked this up on the last earnings, and this is what we have. For the fiscal second quarter of 2024, the company reported a net loss of 10.5 million, a decrease from the prior year of 268 million. Adjusted net loss was 5.2 million, down from 3.8 million. Challenges included 5.2 million in unproductive lease expenses. Positive cash flow stemmed from 81.8 million in customer prepayments, easing capital expenditures for data center expansion. However, supply chain issues with the networking components have led the company to its lowest to lower its fiscal year 2024 guidance. That's why the stock is going down, in addition to its lending requirements, borrowing requirements, to a revenue run rate of approximately 500 million, an EBITDA run rate of 250 million. Okay, thank you very much indeed for that. Now then, of course, supply shortages could be worsened with what's going on in the Red Sea right now. You know, those Houthis who are attacking the container ships, they supply the world with goods, including themselves, which is bonkers why they're doing it. But there you go. People are bonkers, aren't they? Let's have a look at the financials. All right. The revenue has increased, up 35% on its recent range to 115 million. That's very, very good. And we have an S-curve here. You can see it going up and then slowing over. S-curve. We're looking for an S-curve of a company. So that shows potential. Things are improving and expected to improve dramatically going forward. Operating income. That's up by 41% over its most recent range. We were in the red. Now we're starting to move up as far as operating income is concerned. And again, expecting a steep climb there. Net income up 31% on the most recent range. This looks good. Financials look good. Free cash flow up 23%. Cash flow. We like cash flow. Cash flow is the survival, the lifeblood of a business. All moving in the right direction. Capital expenditure has been going down, and now we're starting to spend less. We like that. We've done the investments, and now hopefully we're going to reap the benefits. Up 20% on the most recent range, spending less. In other words, operating cash flow just dropped down 13% from the most recent range. Okay, so some good news there. Now we want to look at the balance sheet in total. Right. We've got assets of 481 million and 325 in liabilities. It's a little bit hot on the liabilities. What we don't want to see is more liabilities than assets, what comes in and what goes out. But we, a new business, spending and developing and investing, it's going to have some expenditure. May have some borrowing. We'll come on to that in a second. But it's not too bad. We don't want it, 80, 90% or beyond of the assets. So we're okay there. It's not the best balance sheet, but it's okay. Let's go into the debt position. Long-term debt. Out of 325 million, it has 70 million of debt. Now, that equates to 21% of its liabilities. That's manageable by the looks of things. Let me see how much cash on the books they've got. They owe 70 million in long-term debt. They have 9 million. So they're not in a position, they're not like Apple or Amazon, which could pay all their debts off, but they have 9 million and they owe 70 million. So they've got a bit of debt, this company, it has to say, but they've got some cash on hand there. 21% of their balance of their liabilities is long-term debt. We can see they've been investing, but with interest rates coming down, this could be a catalyst for the company, because as interest rates come down, having so much debt could improve their position. I wouldn't say it's too much debt. They do have 9 million in cash, but there is a substantial amount of debt there. No doubt about that. Efficiency of the company. Now, this is important. This is where we talk about the moat, the sort of the protection around the company. Is it likely to go bust? Has it got good margins? Well, if we look at it, the gross margin is at 30%. Now, I would think that's quite low in this sector, but again, I'm going to give you links in a minute for you to do more research and compare it to the competition. If you're interested in buying this company, then you can look at it compared to the competition and go, hey, this company is making even greater margins with less debt. I prefer them. I'll give you that in a minute. So anyway, we are moving in the right direction. We were, negative 102%, but we are moving in the right direction. Everything is moving in the right direction. Operating margins is going right. Everything is going in the right direction at the moment, which is good. That's good. We like to see that. Now then, because of the debt and because of the profitability, like I just said, I don't think it's that high for this sector. But again, I'd have to compare it. It's red, 22%. So it's very low score, but that's expected in a young company investing in itself. It's spending money, it's borrowing money. Its profitability isn't great. It's not going to be, but it needs to be, okay? This is the concern I've got here. Like I just said about the debt they've got a reasonable amount of debt. It's not, thank you, Paulius, for your subscription. I'm making this on a live broadcast. The solvency is a concern. It's got 23% solvency score, extremely low there, folks. It could run out of money. As I'm talking about it, the stock is actually going down as well, which typically happens when I go live on my show. If I'm talking negatively about a stock, it's going down. It's not got enough cash to pay its debts off. It's not out of control with debt, but it's got a lot. And when you think that Amazon or Microsoft can do what this company does with its eyes closed, I just wouldn't invest in it. I don't know. I don't see that as an opportunity for me. Anyway, even so, I wouldn't anyway, because I can't buy the stocks because I would be biased if I did. The idea is to present you with the facts. So the solvency score being 23, it doesn't mean the company are going bust anytime soon, but it means they're going to struggle, and they could have difficulties. Now, again, it's not about making money. It's about avoiding not making money. That's how to make money. It's easy to make money on the stock market. The hard part is to keep it. You could buy this expecting some real good growth, and you could end up losing out. But there's certainly a high risk here of failure. APLD, 175% upside from Wall Street. So that's the payoff, if you like, for the high risk. 175% if it goes well, maybe 265%. Worst case scenario, 122. Okay. Now then, competitive landscape. I'm going to give you the links at the end of this video, so you can actually click on these links here, and you can look at the competition, see what they're doing, and see how much money they've got. And that way you can make an informed decision. This is the competition that our AI has detected. All right, I'll give you the link for that in a moment. Inside trading. Now, over the past 12 months, Applied Blockchain, which is now Applied Digital, it's changed its name, of course, has bought $825,000 and sold $2.3 million. Okay, so insiders have sold it, which is always a concern, particularly when the stock's on its arse like this. They've sold out as well. So the director, Moore Virginia, she sold 73,000 worth of shares, as you can see, and most recently it's been sold. So that's not a good sign when a company is in financial stress like this, the insiders, people that work there, have taken their money out. So there's some red flags here. Doesn't mean it's all doom and gloom, but extremely high risk. But then you got the massive upside if you like living dangerously. Okay, let's have a look at the short position. That's a concern as well. 18.62% short position. Now, 20% is regarded as excessive. At 20%, it's excessive short position. You can get a squeeze. However, there's not enough volume here. Not enough volume for a short squeeze, which is great for the stock. This, however, is being driven down without any volume. So again, more downward pressure being put on the stock. Okay, that's not very good. Also, there's no news around the stock. No one's covering it. There's no sentiment. So, which means once my video goes out, it'll probably rank number one within a week or 10 days on YouTube, which is great for me to get this information out. But no one's talking about it. Without anyone talking about it, there's no volume. With no volume, there's no interest, and so on and so forth. But there we go. So I haven't got any more information to share with you on that level. Let's now go over to doing a back test. And this is very, very important because I often get criticized, well, not often, by a few trolls. They say, why are you comparing a low float stock like this, a penny stock, which it isn't actually, it's not under $5. Why are you comparing it with the S&P? Well, it's sensible because you need to compare what you could get invested somewhere else. I mean, I'm not joining a fan club. I'm just trying to invest for my future so I have money in the future. It's simple, really. Anyway, so if we'd invested in January 2023, that's all we can do here. We have limited time to go back. All we can do is go back to January 23. So, just a year. We can see that $10,000 in the S&P would have made us 12 grand. Would now be worth $12,000. So we've made a couple of grand. Very nice. About 20%. Had a good little run the last few months on the S&P. That's in blue. In red is the applied blockchain, which is now, of course, applied digital. It says we'd have $36,000 over that period of time. So we've exploded, and what have you. But it's worth looking at that. You have to look at that and see. Anyway, so let me share with you on this chart here. You can see exactly over the last year since January 23. You can see how it's gone up quite clearly. All right. And now it's fallen back down again. So it's very, very volatile. Anyway, there is my thoughts on applied digital, now it's known as. It's not a stock for me. Very high risk, limited amount of funds now, might need to raise more money. Shareholders might get diluted. A lot of short interest. It's in bed with other very risky stocks. I think if you like this sector, you just buy Microsoft or Amazon or just buy the S&P. You can make more money elsewhere. But the rewards are high if it all pays off. Who knows? Anyway, I promised you those links. If you click above my head, all the way through this video, wherever you see an eye, there's information. And also down here in the description, there are the links as well to Alpha Spread, which is where I find this technology. And my members get a free plan. And if you are a member, you get 10% off if you want the premium plan. It's completely free. The information is free. If you just want to review a couple of stocks, if you want to review every stock, you need an unlimited plan. And then my link will take you there and give you a 10% discount, which basically makes my membership completely for free. Okay, there we go. So over here, I'll put my full Alpha Spread review list. I've reviewed over 60 stocks now, just giving you the facts, the information that you need, and more information as it comes out that I think is relevant to you looking at applied digital. There we go. There is another review for you. I hope you enjoyed that. Until next time, as always, be very, very careful, do your research, and as always, take care of yourselves, your money, and most importantly, take care of each other. Okay, guys, that was made during a live video. I just came on live to talk about this. I was asked to make another review. So thank you very much indeed for joining me. I see we got a few guests here. Largo, hello and thank you. Why nobody talks about Vivani Medical. I can do a full review just like this on Vivani Medical Largo. You just have to become a member. It's part of what I do. It's a member's perk. I'll give you the link. I've got to go now because I just came on to review this stock. I can review a stock for you, make a full video for you, just like this. To become a member, here is the link. It's only a couple of bucks. I'll make it as cheap as possible. That YouTube will allow me to make it as cheap as possible. If you are on an iPhone, you will need a browser and you'll need to request the desktop version. Otherwise, it will work. That link will work on everything. All right, I've got to go. I've got my closing bell show coming up. What I will do is I will put this video so it goes directly to my closing bell show this afternoon. I'll get off, edit this video, and you can join me for that. Let me, where is this afternoon's show? For some reason, I can't find, that's a bit strange. I can't find this afternoon's show. That's a bit weird. Let me just do it this way. That's 2 o'clock. It should be showing up there. Right, let me add it like this. That's not happened before. Well, there we go. What do you know? It won't let me add this afternoon's show. Oh, well, never mind. Not to worry. Don't know why that's doing that. I know why. I know why. I was doing the wrong thing. Let me go back and change it on here. That was my mistake. This is an extra live video, and that's why I couldn't get it to do it. Here we go. Now I can change it. Customization. And redirect. There we go. There we go. All right, this video will take you now to the closing bell this afternoon. And that's it from me. Thank you for joining me. That was just a quick update, allowing me to do another review. I hope you enjoyed the review. And I'll see you back for the closing bell. And then, of course, Microsoft and Google earnings after hours. Until then, as always, take care of your money, yourselves, your crypto, and each other.